What's up everyone, it's Caddy with Money Investing, and in this video we are going to be talking about one stock that definitely does scare me quite a bit as an investor, so I wanted to definitely bring it to your attention. In the past, I've done videos very similar to this on Enphase, Zim Integrated Shipping, and also Upstart, and they were all at super high peaks. They were all kind of having this momentum behind them, trading at all-time highs, pushing higher up hundreds of percent, and eventually they did drop 70, 80, 90% in the case of Upstart. So of course, I've already done warnings on those companies, on those stocks. Now, this is a little bit different. This is not some speculative company or a company that trades on a commodity or trades, at these exuberant levels for the wrong reasons. It actually trades at these levels for the right reasons. And if you haven't guessed already, it is going to be none other than the market's most loved stock. I would say it's not Tesla. It is going to be the other best, and that's Nvidia, ticker symbol NVDA. Now, I want to be very clear because I know this video may not be well received by a few people down in the comment section down below. People are gonna like, hey, Caddy, you don't understand what Nvidia is gonna do, what the potential is for Nvidia, like how big is Nvidia going to get. I understand. Like we're gonna run through some numbers. I'm gonna go over some spreadsheets here. I've already got a lot of things planned out for this video, so we're gonna go over all of that, and then we can make a sound, well-balanced, rational decision on whether Nvidia deserves a $660 billion valuation or not. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. There is a 16% discount that is available for another 6 days. If you want to take advantage of it, after that annual discount does go away. So link's going to be down below to get access to all the buy and sell alerts, options alerts, trade ideas, and all the other benefits as well. So I actually read an article this morning on Seeking Alpha, which was quite interesting. Nvidia, don't be the last greater fool, which does, bring up some good points. Now, investors are abuzz with excitement after Nvidia's corporation's spring 2023 GTC as the company's dominance in the generative AI space is poised to unlock significant opportunities, and Wall Street is roaring with applause. So analysts on Nvidia's price targets have surged over 35% since November, signaling analysts' confidence in its market leadership. Now, one of the things that is quite interesting with analysts is that they almost always raise prices as the stock is going up, and they almost always cut the price as the stock is going down. It is the most stupid thing to do, in my opinion, because you're not really, ahead of the market. You're really just following the market in that sense. You don't really have any targets ahead of place. As price starts going up on this momentum, analysts kind of scramble to that stock and start upgrading its price target, right? And as it's starting to go down, or if this company has a bad earnings or something happens, it just immediately drops the price target substantially. Now, buyers eagerly rushed on board, hoping to ride the train over greater heights. As such, Nvidia's recovery from its October lows catapulted it into well overvalued zones. And as you can see, that Nvidia from its $109 level has gone up over 150%. $275 was the recent, high, 271, and right now trading at $267. It's had almost a perfect V-shaped recovery, and it is only 29% away from its all-time highs of $300 plus, $348 plus. Absolutely nuts. And I think the main reason for this momentum has primarily been three words: generative artificial intelligence, right? So AI has been the buzzword for this entire move to the upside, this entire momentum. Because if you think about exactly when AI or ChatGPT was launched, it was at the end of November. If you come over to the end of November, the markets were already recovering from its October lows, so the markets did push higher. So did Nvidia, and theoretically, we should have stopped right about here, right? As soon as we saw that pullback, it would have been that last sort of run up for Nvidia. But instead, what happened in January is just another momentous 97% gain for Nvidia, and it rallied, close to about 100%, pretty much doubling in price. and going up to $661 billion. Now, I do want to go over some numbers here. So again, we're not going to spend too much time on the numbers that have already been reported. Again, this is from 2023 fiscal year. We've already gone over that in my previous videos, but on a non-GAAP year-over-year basis, we did see declines across the board. So operating income was down 29%. Revenues were flat. I think they were only up like 1%. Net income was down 26% on a non-GAAP basis, and diluted earnings per share down 25% to $3.34. If you take that non-GAAP EPS of 267 divided by 334, we're already trading at almost 80 times earnings on a trailing basis for the company. I think the forward expectations are 450. So 267 divided by 450, we're already trading at about 60 times earnings. So that's not the main issue there, right? That's not the main problem. What is the expectations for way out into the future, right? What is the expectations for Nvidia to actually be doing for the next 5 years out? I don't care about the last 12 months. I don't care about the next 12 months. What I care about is the next 5 years and what that growth is going to look like for Nvidia. And the problem with Nvidia right now, unfortunately, is that it is, quote, priced for perfection. And I want to be very clear, like Nvidia as a company, I really, really like it's a high quality company run by the best management, the most capable, competent people. And it is definitely one of the best growth stocks out there right now. But the only thing that I don't like about Nvidia is the valuation and the price that it trades at. Same thing with Tesla. I can be a huge Tesla bull. I can love the company. I can love what they do. But if the stock price is not trading at the fair value or at my intrinsic value and it's extremely overvalued, I'm not going to care, right? It's not a company that's going to make my portfolio. It's not the company that I'm going to be aggressively adding shares to because of how high it trades. And it's the same thing with Nvidia, right? I'm not saying Nvidia is a bad company. In fact, I think quite opposite, right? It's a fantastic company. And the reason why it is trading at a higher valuation in the first place is because investors want to own this stock. They want to own this company. And that's why, it becomes overly inflated in its valuation. So, if you take a look at the valuations for Nvidia across, the last, 20 years, right? So over the last 19, 20 years, Nvidia's price to sales multiple, we're actually going to go over every single multiple here very, very briefly. So if you take a look at the price to sales multiple, it started off in really low single digits, right? We're talking 3, 4, 5 times sales. Over the recent years, though, in 2019, it exploded to over 12. That was the first time. In fact, in 2017, it was trading at over 16. Then in 2020, over 30. 2021, over 31, almost 32. In 2022, it came down to 19 because of the entire sell-off. And then now, 2023, we're back over 22, 24 times sales. So this is the entire chart for price to sales for Nvidia in terms of valuation. You can see how in the past we've traded between about 0 and 5. So it's been very close to 5. It exploded to over 15, 16 in 2017, came back down to more reasonable levels, and then had this huge explosion in price to sales valuation for this company all the way up to 32, came down to more reasonable levels again in the 20. I would say it was okay, not still reasonable, but okay. And then now we're back in the 22s, 24s for Nvidia. So you see a pattern, right? You're actually seeing the valuation actually make higher highs and higher lows. It's not really, the previous peaks are becoming its new lows for the valuation. Same thing can be said with a price to earnings multiple, although it has seen a much bigger peak from back in 2020 and 2021. So if I insert this chart, you'll notice it was obviously negative for some time. And now it's once again trading back to its level that we have previously seen as considered to be really, really high at closer to 100. Very much close to about 89, 90 levels. In fact, it did drop a little bit from these levels at 123, dropped down to 54 because of that 50% sell-off. And now once again, we're pushing back higher at over 54, 55 levels for this valuation multiple. If you come over to price to free cash flow very quickly, and I plot that chart, once again, it's just a good way for us to understand what those historical multiples have been. I'm going to do this time. And as you can see that, again, it was in the past, on average, I would say it's traded at roughly around 20 to 40 times price to free cash flow. Of course, some years have been negative. Some years have been a little bit higher. Some years have been lower. But on average, I would say 20 to 40 times. And you can see if you do an average for this multiple, So we're going to do an average function. We're going to do this. It's been about 40, right? So it's been about 40.6, and right now it trades twice as its average, right? I think same thing can be said from its price to sales multiple, right? If you do the average for here, right, the average price to sales multiple for Nvidia over 19 years, all right? So you have to understand what I'm really showing you. Over 19 years, the average price to sales multiple for Nvidia has been 10. It's trading at 24. And then let's take a look at the price to earnings. So we'll just do that. Price to earnings is actually going to be 17 points. Actually, there's also negative numbers in there. So we're going to actually take for the last, say maybe 10 years or 15 years. We come down to 55, right? Because there's a big couple negative numbers there, so I'm just going to exclude for those. But 55 is the average P multiple, which is obviously a lot more reasonable than 82, right? 79 to 82 at the moment, even 60 where the stock trades on a forward basis. So again, the valuation is still higher than its previous averages. It's also higher than where we have traded in the past in some cases. So that's number one. And number two, I want to go over the actual earnings expectation for Nvidia and how is it actually priced right now at $267. So what I've done is I've taken into account analysts' own estimates, right? In 2024, they're expecting $4.50 for EPS. In 2029, they're expecting $14.23. In 2033, they're expecting $20.22. And these are the CAGRs, right? This is what the compounded annual growth rate looks like for Nvidia over the next 5 and 9 years, 25% to as low as 18%. You know what I'm going to do? I'm going to go with an optimistic number here. I'm actually going to go with 32%. I'm actually going to go that high, right? Much higher than what the analysts are expecting. I believe Nvidia with the generative AI is going to be able to grow earnings 32% over the next 5 years, right? So this actually was 2023. Boom, there we go. So by 2028, their earnings are going to be over $13.54, right? That's going to be that number that they're going to be able to grow at over the next 5 years. The P multiple, I'm also going to go at 30, right? So to keep that PEG ratio pretty intact, we're going to keep 12% discount rate. We're going to keep margin of safety at 10%. And even with those estimates, right? Even with those estimates, the fair value ends up at $207 per share. Let me just go back a little bit. There we go. $207, right? And the price is at $267, meaning that there is 22% downside for Nvidia. Even if I go with 35%, right? $232. Let's just do 40% here. 40%. Nvidia has to grow by 40% earnings over the next 5 years and demand a 30 times P multiple in order to justify the valuation that it's trading at today, right? In order for Nvidia to be viable or their intrinsic value to be the same as the price today, it has to grow earnings by 40% over the next 5 years and trade at a 30 times P multiple to justify the valuation today. So that is the problem. And I remember putting out, there was a Discord, in my Discord, I pretty much mentioned in the money vesting fair value. And if you go back and see that right now, let's just quickly go over this. So what I'm going to do is I'm going to actually go over money vesting fair values here. This is a channel that we do have. And if I go over to Tesla, right, there was a time when I actually posted Tesla's analysis here. There we go. This is the one that I'm talking about. This is from back in October 2022, right? I mentioned that Tesla sensitivity grade based on the 5-year growth rate estimates and P multiple discounted all back using a 12% discount rate and 10% margin of safety with a 1% share dilution. My fair value based on my assumptions, that's in yellow, and the red is the market price. The bottom line, I mentioned that there is very little room for error for Tesla. As you can see, at 27 times P multiple and a 32% CAGR, Tesla's fair value drops like a rock. For it to hold up, everything needs to go according to the plan. Almost perfect is what I mentioned. And at the time, my fair values was down to 149. That was my fair value at $149. This was back in October of last year. And it was trading at $241. Right, so if you go back to what happened with Tesla, and when I did the analysis was back in October of last year, right around here when it was trading at $240 something, right, $241, and it ended up dropping, up until January. It came down to low 100s, right, so $101, and then of course it rallied right back up. So the bottom line, the point that I'm trying to make is that stocks obviously can trade very much on sentiment. but the real value is dependent on the company fundamentals. Ask yourself this very simple question: has Nvidia's fundamentals changed in the last 6 months? Right? Have the earnings and the revenue just gone up 150%? If the answer is no, then it's very much likely the stock itself is trading on sentiment and momentum as opposed to anything else. And I think the same was true with Tesla back then, where everything needed to go perfectly right in order for Tesla to justify its valuation at those prices. Now, of course, as fundamentals improve, I also upgrade and update my fair value as well, kind of accounting for the newer growth rate, the newer earnings, the newer share count, all those things. But going back to Nvidia, I unfortunately don't think that it deserves a $267 price or $660 billion valuation. I mean, it's more than Tesla. It's more than AMD, Intel. It's more than the next 5 semiconductors companies combined. It's absolutely wild. But let me know down in the comment section below, what do you think about Nvidia? I would love to know from you guys as well. Make sure that you drop a like, subscribe to the channel. And again, the next resistance really for Nvidia is going to be at 292. That's the target that I'm watching. And I fully do expect Nvidia to get up to that level. And also don't forget the RSI and the MACD is getting up to over 75. So it's becoming increasingly risky to own Nvidia at these prices, considering how overbought it really is, and of course how it's approaching certain resistance levels. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. If you're just joining us for the first time, I can't wait to read the comments in this video. As always, happy investing. I'll see you all in the next video.